Coffee prices are at an all-time high. You may have noticed this at your local grocery store, but then again, you may not have, because the price of everything seems like it's at an all-time high. And it is. The glut of fiat currency that flooded the world since the pandemic didn't make the world able to produce any more coffee, or gold, or oil, or copper, for that matter. Coffee is among the most traded commodities in the world, often cited as second only to crude oil, but it all depends on how you count. Coffee plants are particular. They only like certain temperatures, hate the frost, and grow best when they have a long, dry flowering season. It can only be grown commercially between the tropics, and only at certain elevations. Coffee was first commercialized in the early 18th century by the Dutch East India Company, which took seeds from the Yemeni highlands and set up plantations in Indonesia. Java coffee became so popular in Europe that they quickly established more plantations in Sumatra and Ceylon. Pretty much anywhere it would grow in the territory the company controlled. Coffee is a consistent seller because it's good. It focuses the drinker, tastes great, everyone likes it. Globally, we drink 2.2 billion cups daily, and it takes 105 billion kilograms of annual international coffee trade to make them all. All commodities are volatile, and when their markets go bananas like this, it's usually because of a supply-side threat, real or imagined. The threat driving this coffee market has to do with climate change. As weather patterns change, so do the places where coffee grows best. Farmers might have to move the plants to higher elevations or start growing in different localities altogether to keep the plants growing, get the yields they expect, and keep the plants away from pests like the coffee borer beetle and a fungus called coffee rust. Today, Brazil and Vietnam are the number 1 and 2 coffee exporting countries. A 2022 study on the expected global suitability of coffee growing regions has projected that both Vietnam and Brazil are going to lose suitable coffee growing territory between now and 2050 as the landscape, soil, and weather patterns change with the changing climate. We're in the middle of the Vietnamese harvest season right now, and the harvests are way down. The rainy season came late to the coffee growing regions in the Central Highlands, which had been experiencing drought conditions up until then, and abnormally high temperatures all around.
What we are talking about in Vietnam was that we had 2 to 4 months of very severe drought, and then we had this extreme heat for 2 to 3 months, as we've seen all over the world, literally. Taking a look at what is actually going on with the new 24-25 harvest, and all eyes in the world are literally on Colombia and the big producers these days, because it is now a fact that the 24-25 harvest is a disaster worldwide.
Brazil's harvest is in May, and it's not expected to go very well. Estimates have production down 11 million bags to 34.4 million bags thanks to an extended drought. If you think coffee grower conditions are going to get worse before they get better and are inclined to bet on it, you might be out of luck. Coffee futures aren't generally available to the average retail investor. There used to be a couple of ETFs, but they were thinly traded and have now dried up. Most of the world's coffee is controlled by Louis Dreyfus, a French commodities trader that, along with Bunge and Cargill, control most of the world's food. Louis Dreyfus buys coffee directly from producers and uses its own logistics network to store and transport it. They sell coffee in various states to different types of distributors and middlemen. Green coffee for roasters, roasted coffee to grinders and wholesalers. They got a whole research department that stays on top of how much coffee they got, how much coffee they are going to get, and how to move the most of it at the best margin. Louis Dreyfus just bought a Brazilian maker of instant coffee called Companhia Cacique de Café Suvel, which will add to their vertical integration to put more of that plant-to-cup value chain in their cup, so to speak. Louis Dreyfus earned $2.2 billion in 2023. Their merchandising division, which handles the coffee along with cotton, sugar, and rice, earned $697 million. The biggest and most recognizable American coffee company doesn't buy its beans from Louis Dreyfus and doesn't get caught in the big swings in the coffee market. They maintain direct relationships with farmers that allow them to buy green beans 12 to 18 months in advance. They often pay those growers a premium to the market price to maintain the relationship and make sure they always have supply. Starbucks does their own roasting and always has a supply in the pipeline. That's crucial. Roasting is the highest pound-for-pound margin in the coffee value chain. From an investor's perspective, Starbucks doesn't represent exposure to the prices of raw coffee, just the opposite. Starbucks' whole supply lines are set up to make sure the fluctuations in the coffee market don't get in the way of their retail coffee business.
What? Orange mocha frappuccino!
If the Arabica beans that Starbucks buys get more expensive, they might be able to raise the price of a frappuccino to make up for it, but they might not even have to. The whole point of owning the bean-to-cup supply chain is that it gives them a way to absorb a price jump in the raw commodity with the margins they make in the other parts of the value chain, and continue on their growth trajectory, eventually making up the difference with more volume. Starbucks isn't so much an investment in coffee, but an investment in a coffee delivery business. As a business, they capture the highest margin part of the coffee process, roasting, and make it part of a larger retail delivery business that has an enduring popularity in America and is still expanding worldwide, including into China. Starbucks stock took a bit of a tumble in May when they missed on Q2 2024 earnings. That was also right around the time when activist fund Elliott Investment Management took a position and started throwing their weight around. By August, Elliott had engineered the appointment of Brian Niccol as chairman and CEO. With their guy in charge, Elliott released a statement about how happy they were about the company's new direction, and the stock jumped right back up to where it left off. Other companies making their money in the high-margin roasting business include the J.M. Smucker Company, which roasts, packages, and sells coffee under Folgers, Cafe Bustelo, and Dunkin' brands and sells them in grocery stores. Smucker obviously isn't a coffee pure play either. They sell all sorts of packaged grocery goods, and it stands to reason that they'll see some kind of margin squeeze from the coffee price going up. Whether it will matter or not is hard to say. Nestlé is another brand with big exposure to coffee. The stock hasn't been doing very well, but why big European stocks like Nestlé do anything they do is hard to figure. They're an old Swiss company which does about $100 billion a year in sales and are always facing some kind of scandal over child labor or jacking up the price of baby formula or something. In 2017, they hired German pharma exec Ulf Mark Schneider to be their CEO. Their first outside hire for CEO since 1922. Schneider diversified Nestlé. He streamlined their operations and they saw their share price double by the end of 2021. He left the organization this past August and the company is still finding their footing under new CEO Laurent Frixie. Nestlé absolutely moves a lot of coffee, especially in Europe. But like Starbucks and Smuckers and all the rest of these retail coffee brands accessible to the public, the coffee exposure is buried in all of the other parts of their businesses. For regular people, the best way to be exposed to coffee is in the morning, or on your drive into the office, or maybe out of a thermos while you're fishing or on a job site. Or how about from your favorite barista as you sit down at the local coffee shop to finally write that screenplay. But pure, unadulterated coffee investments, they're just hard to come by. All right, everybody, thank you for watching. If you enjoyed this video, do me a favor, share it, like it, subscribe to our channel if you haven't already. Let me know what you think in the comment section. All the engagement we get motivates us to keep going, and I promise you, we really, really appreciate it. Thanks for watching, everybody.